Okay, good afternoon, everyone. My name is Bill Levinson, Managing Partner with Levinson and Associates. With me today, we have Joseph Loughran, our Marketing Vice President, and then we have Stephen Summer, IUL Specialist from Minnesota Life. So we have some great stuff to talk about. If you saw our marketing pieces on our website or through eBlast, we were marketing today's training as the ultimate door opener, okay? And this is a product that I feel once you have your arms wrapped around this concept, just like we said in some of our material, no one will say no to this, okay? Very easy to understand concept from an agent's perspective and, of course, from a consumer's perspective, which is most important. So great stuff to talk about. Like I said, I don't care if you're working final expense or mortgage protection, or if you're in the annuity space or a financial planner, RIA, whatever the case is, okay? Everyone, and I mean this, and I think you'll agree in about 40 to 45 minutes here, everybody will agree with us that this is an awesome sales idea that will help you get your foot in the door, okay, to make some more sales and, most important, help your consumer, okay? So great stuff. Now, Minnesota Life is one of our top IUL go-to carriers, okay? They also just had their hybrid LTC life product approved in Florida. So that's a big push for us. About 25% of our agents are based out of Florida. The rest are all over the country in almost every city in the U.S. So that's a great, awesome fit for long-term care life insurance. So you'll see us marketing that. In fact, what we're going to do is send out a thank you email to everybody on the call, like always, okay, and we'll include some great brochures on the legacy concept, which is what you're going to learn about today, and some other Minnesota Life Securian brochures for consumer and for agents. So we'll include everything in our thank you email. And of course, if you're already licensed, okay, and you're not with us, no problem. What I would do is take advantage of our cash for contracting incentive. Basically, you transfer over to us. If there's been business written recently, you'll need a release. But as soon as you transfer, we match or beat your existing grid. Plus, you'll get anywhere from $100 to $500 cash with your first application. Okay, so definitely take advantage of that incentive. That's big, especially you can obviously make a few more bucks and you get to work with us here at Levinson and Associates. So, just a quick story. The way that this whole concept came up for us here at Levinson is Steve, you're going to hear from in just a few minutes, came down and we did a breakfast lunch and learn for our local South Florida agents. And everyone's eyes were glued when we brought up this concept. And yes, the concept works great and it's a good sales idea, but the amount of attention and then, of course, the results and applications written after that lunch and learn were astonishing. So that's when we all said, you know what? Most of our agents are not in Florida. We have to host Steve in Minnesota on a live training webinar, and that's how this whole idea came up today. So I really hope everyone appreciates this, and my goal is by the time we're done that everyone walks away with a nugget of information that will help you change your practice for the better moving forward throughout the rest of the year and, of course, in the future as well. So we don't want to waste any more time. We want to make sure that we maximize every minute spent with us on these training webinars each week. So without further ado, we're going to move forward here. We're going to jump into our infographics. Now, we have a lot of moving parts here at Levinson. In fact, every week, we literally have something new and hot going on. And just yesterday, okay, we have launched the first ever exclusive Levinson E&O policy. Errors and omissions, every agent should have policy. You can now access that policy through our website, okay, and you just click once, fill out the online app, and you're instantly approved. You can print your binder. This policy is about 20 to 50 less than any other errors and omissions agent policy. So very, very important. Help you save a few bucks, okay, by utilizing this. And it doesn't cover just our carriers. It covers any carriers that you're contracted with as long as they're B+ rated or better, okay? So that's very important, but leverage our volume, okay? We are able to do this stuff because we have over 14,000 agents that take advantage of these programs and tools and policies. It's almost like the Costco approach. So ride our coattails, take advantage of these huge discounts on E&O, on our lead programs. We have a few other programs available as well. That's all co-op pricing. So you got to run with this stuff. If there's a lot of moving parts, you get a little confused, okay, and you say, you know, Bill, I want to jump on board, but I don't know where to begin. That's why we came up with our infographics, which is what you're looking at right now. So I know I just said that really, really fast. And if you say, hey, you know, I want to get going with this E&O, I want to learn a little bit more about it, you click on the marketing tab, okay? We have 3 pictures, infographics. One is marketing, one is contracting, one is new business. Everything you need to know is itemized by number, okay? It'll say scholarship program, number 14, let's say. You click on number 14, it gives you the breakdown of what it is, how it works, and then there's a little request info button where somebody will call you back within 24 hours, okay, if you need a little more personalized one-on-one attention. But the same thing goes for marketing, contracting, and new business, okay? Everything is right there, and we update these in real time. So as soon as there's a change, we update the infographics. If you have a downline, okay, this is a great tool. You can simply email these out to your downline agent that's coming on board or is on board, and they can go through the whole graphic and see everything that we have and what they would like to get up and running with. So we made it very simple for our agents. Okay, moving forward. Now, it's so important because, you know, we have a lot of these third bedroom term type of agents, okay, which is great, okay? There's no small $20 bill, as we all know, and the $10 a month term case leads to other things. Obviously, it's also building your book of business and can lead to conversions, you know, it goes on and on and on. The point I'm trying to make, if you're strictly focused on final expense and burial insurance, or if you love running, you know, the cheapest term insurance products in the country, which, by the way, we have that as well, but if you're focused on a certain niche, a certain part of the industry, and you always thought IUL was very confusing, a lot of moving parts, how are you going to explain this? It's too expensive, it's too tough to illustrate. All of that is many, many years ago. Okay, that's old news. Nowadays, we have made things very simple. We have IUL sales software. We have a PowerPoint presentation you can use in seminars or on a webinar or at a Starbucks and face-to-face with one of your prospects. Everything is easy. We have a scholarship program. Okay, think about this for a minute. IUL is the ultimate college funding tool, right? We know how that works. Or retirement savings, right? There's no better place to go than an IUL. So think about this now, college funding. So you have this cash accumulation, okay, that looks and feels great. Every year it builds and builds and builds, okay, hundreds of thousands of dollars. And now you have a scholarship that's running on the side of your cash value account. So let's say you take out an IUL. I'm speaking for the client, let's say. So the client takes out an IUL, and they have a son, little Johnny, who's, let's say, 10 years old. So now, little Johnny, right, 10 years old, you know Johnny's going to college, okay? That's not even a question. So Johnny, in 7 years, is going to start, right, his 4-year tuition at a local college, let's say. So now, you take out the IUL, you have cash accumulating every year, okay? And let's say in 7 years, when Johnny's ready to start school, you have, let's say, $50,000 of cash value that you can utilize, and you have another $50,000 in your scholarship account. That's $100,000 to be used towards Johnny's 4-year tuition. Okay, that pays for 3 out of the 4 years with some schools. So you talk about a no-brainer. and your client doesn't pay anything in addition for that scholarship program. It runs side by side. We have 400 colleges in the program now. That, folks, is a no-brainer and an awesome sales idea, because I don't know any young parents with kids that don't want to talk about college planning, funding, and scholarships. So that's an easy door opener. We have the college scholarship pins that say, ask me about free scholarships. We'll mail those out to you free if you haven't received one yet, as long as you're licensed. In fact, it's funny. We just had an agent walk in the door here, and she came in to watch the webinar live from the conference room, and she was wearing her pin. So of course I made a point, and I told her I'm going to take a picture of it and put it on our social media page. The point is, the pin sparks conversation, which leads to sales, as we all know. So real quick, enough of my ranting. So as you see, yes, Minnesota Life is top left. Okay, that means they are our go-to for IUL. Okay, the other carriers that you're looking at in front of you, the ones that have a red asterisk, include our free scholarship platform. Okay, so if you want to jot that down, we'll also include this slide in our thank you email, so everybody is aware of what products we have, and of course carriers are our go-to. So let's move forward here. We also put together, first time ever, once again, our iGenius IUL software tool. This was created to make your life easier once again and make IUL an easy black and white sale, so there's not too many moving parts, and it will literally compare a current IUL illustration, okay, against a current retirement product. This is the only carrier-approved software that was designed to work in the IUL space in the industry today. We have it. It's free as long as you're writing at least an app a month with Levinson. We also have a book that we put together that is awesome to hand out to your clients. Once your client reads it, they're ready to set up an appointment. Joe's going to dive in a little deeper and show you what this looks and feels like. Joe?
Yeah, thanks, Bill. So the IUL sales software is really kind of a unique platform. There's really nothing else out there, and we've looked at all sorts of programs, platforms, calculators. This tool literally allows you to run an illustration or have our marketing team run an IUL illustration, plug in just a couple pieces of information, and then it kind of creates all these customized, personalized presentations for your clients. The best part is you can design it for a one-on-one presentation, or if you're hosting a seminar or a group presentation, they also give you all the materials for that specific group. So not only is there a client brochure, custom proposals, but even shows downside scenarios, cost analysis, and really we have agents that have used this program and they will not sell an IUL product without some of these supplemental illustrations. It really breaks down what an IUL is, how it works, what are the tax advantages, and just shows the client really all the added value inside of that IUL product. So really, I think it's a must-have. You can actually reach out to our marketing team. We can help run these presentations for you, or like Bill said, you can actually gain access to the web-based software yourself. We'll send out instructions after today's call, but it's a really, really simple tool to kind of streamline and really help you increase that IUL production. It's great for agents that even are just starting in the IUL marketplace, or even agents that, we had an agent that was selling IUL for years, and he said, I really want to take a look. And it turns out that even an agent who's very experienced in the IUL marketplace can really pick up some great nuggets of information and help kind of streamline the entire sales process. And I think it comes down to just having the client understand all the advantages of the IUL product. So definitely a must-have for those IUL sales. Bill mentioned this great sales tool for IUL. It's actually a book called The New Rules of Retirement Savings. We can send these out if you're interested. This really kind of helps explain permanent life insurance, index universal life, how clients can use it to set up retirement planning, college funding, lifetime savings gift. So it's a great way to be able to introduce index universal life to your clients. Give them a copy of the book. Say, hey, do me a favor, read it. I think it only takes about 45, 50 minutes. At the end of that, they're really going to understand the problem with traditional retirement plans and how an index universal life product can really help them out. So we have agents that are ordering books batch after batch because they're giving them to qualified prospects, and that prospect is coming back saying, hey, I love this idea. I need to set up an appointment to actually put together a product and kind of see how to my individual scenario. So those are available. You can actually access them right through the CarrieLevinson.com website. Also, if you're interested in that IUL sales software, you can go right to the Agent Tools tab. I kind of put a screenshot on the screen here. You can actually go to IUL Sales Software, request access. We'll send you all the information, not only for that IUL sales software, but also the book, so you can start using that today and generating some new leads. Now, real quick here, I do want to mention one tab of the website that's really been helpful for a lot of agents. That's our Advanced Marketing Resource tab. You'll see that highlighted in blue there. And what we did is put together all the different information for buy-sell agreements, key man, split dollar, all the calculators, advanced marketing software in one spot on the website, so you can go in there and access that. A lot of times when you're writing an IUL product, clients have questions about tax issues and compliance, and all that is available 24/7 right on the website, again, underneath Advanced Marketing Center. That is updated on a weekly basis as new content is created. So a great spot to go and pull more information.
Okay, thank you, Joe. Yep, and if you're interested in those books on Amazon, they're $19.95 retail. Our agents pay a $5 co-op fee. Okay, so again, those are great handouts, especially holiday time, and they will set appointments for you. Okay, so without further ado, this is the product that we have all been waiting for, a sales strategy that I said in our e-blast. No one will say no to this once you get your arms around it. So without further ado, we have Stephen Summer from Minnesota Life Securian, our sales manager and go-to when it comes to IUL. Steve, you there?
I'm here.
Okay, thank you.
Yeah, and I appreciate the opportunity. Yeah, and to kind of piggyback on what you had mentioned. This was really well received at that meeting that we had here a month or so ago, I guess it was, or 6 weeks ago. And so I'm happy to be here to be able to share this sales idea with everybody on the WebEx today. This actually did come from the field. It came from actually myself working in the field years ago. I was working with a company that does a lot of Medicare supplements at the time, and going out and field training young advisors when they were meeting with these clients that were about ready to turn 65. And over again, the conversation would turn to people lamenting about how they wish they had done more, saved more, been able to set up a larger legacy to leave to their kids or grandkids. And it was a very typical conversation. And many of these people had done fairly well for themselves, hundreds of thousands of dollars worth of savings in a home that was paid for. And many of them had a positive cash flow every month because of multiple sources of retirement income, whether it be pension or Social Security and so on coming in. And so many of them had positive cash flows. And so I went back to the office at the time and put together a strategy, started playing around with different products and ideas of how could we help them in a very economical way build a legacy that they could pass on to that third generation, to the grandchildren. And from there is where the sales idea sort of was refined, if you will. And then from there, we had some great success with it. When I moved over to Securian a number of years ago, I plugged it into Securian's IUL contract, which is typically designed for max funding. It is designed for a lot of self-employed individuals or people who are high income earners, or really anybody who wants to have a Roth type of an investment plus, I guess, if you will. I call it a Roth plus because if you have a Roth and something happens to you, the family just gets whatever happens to be in those investments. However, but if you happen to be part of that 16% here in America that something happens prior to your retirement, if you have it in an IUL, the family's going to get a much larger tax-free death benefit. So it's really an excellent way for somebody to be able to take advantage of some upside, have a floor to limit their downside, and then also be able to leverage by having a much stronger death benefit. So it's a great concept for a lot of people. And I plugged it in on a juvenile, which is not really the contract can be written on children 14 days old or older, but it's not the target market that the contract was originally designed for. But it really does perform extraordinarily well, and you're going to kind of see how that works as we go through this. So what we're going to talk about today really is a great opportunity that you're going to have with your clients, and a great opportunity for your clients. It's also, we're going to talk a little bit about insurability and how affordable it really is. And then lastly, we're going to cover a case study that shows really the nuts and bolts and exactly how it works. So this is an idea where you can set this up, for your client, for their young grandchild or their child. That's really going to help them have protection now as well as throughout their life and their financial future, and protection that they can grow into. Purchasing a policy when children are young, they're typically healthy, and they're able to lock in an underwriting class that they may not be able to get even in a few short years. In fact, I do this frequently, this presentation over the years. I've done it many times in front of large groups of people, and very frequently in those presentations, somebody in the audience will raise their hand and tell me about their children or their child or their grandchild, or somebody that all of a sudden has juvenile onset diabetes as an example, or something that has happened that has hurt the possibility for insurability down the line. So it really does help by getting the children insured early on to guarantee that future insurability. So with them being young and healthy, time is on their side. There's paid-up policy options that are out there that are very affordable. Again, the future insurability is something that they're able to lock in and be able to offer for that child throughout their lifetime. There's a lot of flexible agreements, riders that are available, and it can really provide a great peace of mind through some of these guarantees that are available in these sales strategy. And it can be a great way for somebody to gift to, or a great thing for somebody to purchase by gifting. In fact, we have a lot of people who will look at this strategy and over the last few years, and then come back and said, well, you know what we want to do? We have a gift tax exclusion. We're going to go ahead and gift $24,000 to this for our grandchild, and just be done with it. Just go ahead and fund it that way, and that's a possibility. So what they're able to do is gift that over without it becoming a taxable event, and fund a life policy that's going to provide a lifetime of protection for the child, as well as a lot of financial flexibility. And you'll see more about what I'm talking about as we get further along the line. Now, as Bill had mentioned, college funding. This is a strategy that can certainly be used for some of that. There are other options as well, and so we definitely like the idea of what Bill's talking about, is multiple sources that people can dip into for college funding. And so although we're a life insurance company, we never promote that somebody would put all of their money into a life policy to fund it. We would say, put some into a 529 plan, or one of the others that are designed specifically for college funding. They're all great tools. The main thing about college funding is it doesn't get any cheaper, does it? And so as we look at the rising cost of it, it's important for people to take it seriously and to start investing early and invest often. And so our suggestion would be to definitely have life insurance as part of the overall plan, along with some of the other options that are out there to help with the college funding. The nice part about the life insurance, as many of you are probably aware, is that any money that they take out of the life insurance can be used for anything. It's not, it isn't tied to any specific type of expense. And so that gives them, by having that bucket, it gives them the flexibility to be able to pull money out for whatever kind of expense the child might need, whether that's transportation to get to and from school, or any other specific expenses that may not be eligible for other plans. So that's another reason why, if it's a great idea to be diversified and have different buckets available for that funding strategy. This is a slide that I kind of had put into the presentation primarily, really to make a point, but also to remind me to point this out to everybody when I do the presentation, is that really many times when you see these kind of presentations, they're designed by tax attorneys, the advanced market team, and so they'll start out with something like, find yourself a multi-million-dollar business owner, and boy, do we have some great strategies for you. We can really help you when you find that. Well, the thing is, most of us in the field don't work 50, 60 hours a week with multimillionaire business owners. We're out there blocking and tackling. We're working with the middle class, and so this is a strategy that you can take with you, and everybody, literally everybody that can hear my voice right now, can go out and sell 8 or 10 of these policies without even spending 5 minutes to try to figure out who they would want to talk to about it, because you all have friends, relatives, prospects, clients that have young children or grandchildren, and all you need to do is pick up the phone and call them and say, you know what, I saw this fantastic strategy, and I would love to get together with you for 5 or 10 minutes over a cup of coffee or what have you, and be able to go ahead and present that to them and let them know that they've got that going on. So so what we're really talking about, again, to kind of set up the case study, is we're talking about how the average person can leave quite a legacy. They can help insure a child at a young age. We also recommend throwing on the guaranteed insurability option rider. That's with our company a competitive advantage, is that they can actually skip the first 6 options and take the 7th if they want to. And so there are other guaranteed insurability option riders out there. They're not all created the same. And so one of our competitive advantages is that, maybe when they're 23 years old and getting out of college, they don't need any additional coverage, so they decide to skip that. Well, with some other carriers, if you skip that first option, you get no future options. So it's something to be aware of. But with Minnesota Life, they could skip that option and take the one at 25 or 28 and go ahead and add additional coverage. The other thing is that we offer juvenile coverage at true preferred rates. It isn't guaranteed issue. There's going to be a phone interview involved, and we're going to pull a medical information bureau to verify health, but there is not going to be any exam or blood drawn or anything like that. And we're going to be able to go ahead and most of the time we're going to be able to get them preferred non-tobacco rates, which is a huge competitive advantage, again, over many other companies out there that actually have their juvenile policies priced in at standard. And so a lot more cash value can be grown when you have a smaller cost of insurance, obviously. There's flexibility in transfer of ownership. When the child becomes 18, they don't have to automatically turn the policy over to the child. This could be problematic if you had a spendthrift. I know that if I gave the policy to my daughter would continue to pay on it and keep it. If I gave it to my son, by the time the afternoon after I gave it to him, I would come home and there would be a new Corvette in the garage. And so it really gives them the flexibility to say, wait a second, who's is the child responsible enough to transfer that ownership? And when they do transfer that ownership, as I touched on earlier, with the gifting stuff like that that's out there available right now, it's not going to trigger any taxable event. There's an opportunity there throughout the life of the policy for loans and withdrawals, and the cash value can be used to help pay for college, as I mentioned earlier, but also down payment on a house or maybe a wedding. And this is some of the times where I would go into some storytelling and just say, imagine your granddaughter Abby came home and introduced you to the guy who they're going to get married, and they don't have any idea how in the world they're going to be able to afford to pay for a wedding because maybe mom and dad haven't been able to save enough or any for that purpose. Well, but with the forethought of the grandparents setting this up when Abby was only a couple of years old, now all of a sudden they can go ahead and call Minnesota Life and they can send them a check and they can help pay for that, or give the down payment on a house if they're nowadays, down payments are more important as the mortgage companies have gotten stricter with their rules. So again, this is a great opportunity for them to have the money available to take care of that. And then you'll also see how it can provide for some supplemental income down the line, and how it truly is a legacy that they're leaving. Every time the child interacts with this contract over their lifetime, they're going to think of the person who set this up, who had the forethought to set up this for them, because it is a substantial, even though it doesn't seem like a lot monthly, but it is a substantial amount of money that this can grow into, thanks to the power of tax-deferred compounded growth. And so this is just an example, and because we needed to have something to show. But in this particular instance, what I did is I used the Orion Index, which is one of the top performing IULs for accumulation available on the market today, and I did it on a 2-year-old girl, and did it with minimum death benefit, which is the minimum death benefit according to the IRS. If you have a preferred non-tobacco 2-year-old and you're paying $99 a month, the smallest amount that we can give that child is $167,417 without it becoming a modified endowment contract. So this is the minimum death benefit that we can give in order for this to be a life insurance policy and for the gains to be growing tax deferred and come out tax preferred. I used our blended index, which is a great index to use because it's kind of a set it and forget it. You don't have all your eggs in one basket. You have some Euro stocks in there. You have the S&P in there. You have some bonds in there. And so it's a kind of a set it and forget it. You don't have to worry about having it all in the S&P 500 as an example. And then if the S&P doesn't do anything, there's zero that year. So in this particular instance, by being in the blended, you've got some diversification going on. I just set it up at the default interest rate, which is the 7.13, and I had the death benefit increasing again to prevent it from ever becoming a modified endowment contract, so that we're going to be skating just below the MEC limits on this thing. And so the maximum amount of the premium throughout the life of the contract is going into cash value to continue to grow tax deferred for the child. And the second part of it is, and again, this is just an example, it doesn't have to happen, but it shows well and people like to see it. But the 22nd year of the at age 22, the 20th year of the contract, they're able to take out all of the premiums that were paid in. So we're paying $99 a month for 20 years. It comes to a total of $23,760, and they're pulling that money out, whether that is to help pay for college, pay off student loans, or what have you, or again, down payment on a house or a wedding. You're going to see that even on the guaranteed death benefit side of things, it's going to support a death benefit throughout the working years of the child, even with nobody paying any premiums beyond that initial 20 years. And then if it performs at 70% or better of historical averages of average crediting over the next 60 years, the child would have more than enough money to take out for retirement. You're looking at $56,000 a year or so for retirement, I believe it is, $1.1 million. So here's what it looks like. Again, here's just kind of the running that whole thing down that I just kind of said, all in black and white. We did throw on the guaranteed insurability option of $100,000. So that's going to give this child the opportunity to add an additional $100,000 once every 3 years from the time they're 22 to the time that they're 40. They can add an additional $100,000 at preferred non-tobacco rates without ever having to go through any underwriting. All they would do is when they get that annual statement, they would just say, yep, I want to do that. They check the box and send it in, and it would be done without any issues. Doesn't matter whether they've taken up smoking. It doesn't matter if they've had health issues. They're going to be able to add that additional coverage if they decide they want to. So here is sort of the way that this looks as far as um, the actual illustration goes. And the way that I like to show it out is that, kind of point out, again, the initial starting death benefit is the minimum death benefit that's set up by the government, saying that this is how much they have to have in death benefit in order for it to be considered life insurance. And then I show people how it is an increasing death benefit. And then I show them how in the 22nd year, I guess when the child is 23, they would take out the 23,760, and then show them again that there's because of that withdrawal, the death benefit drops. I also drop the death benefit down to minimum death benefit in order to lower the cost of insurance, so that cash value can continue to grow. And you can see how that continues to grow. In fact, it's growing at a rate fast enough for it to where it's pushing that corridor. If you look over on the right side, it's actually pushing that death benefit higher, even though no more premiums are being paid in. But so you can see how the death benefit continues to grow. You can also see that middle column where that 81,789 is there running out. You have throughout their 40s and 50s and into their 60s. Again, you can see how no more premiums have been paid in, but even if you look at the conservative crediting rating of 7.1, you're looking at that death benefit continuing to grow over the years. And then when the child hits 70 years old, they're starting to take 50,527 out a year for basically 20 years. So you're looking at 1,010,539 that they're able to take out. And the other things that I like to point out, though, too, is that even while they're taking these withdrawals out, you can see that death benefit over here on the side. So they could be 80 as an example, and they would have taken these withdrawals out to help supplement their retirement income. And when something happens to them, this remaining death benefit would still be paid out to the family. And so it is on a tax-free basis. So they'd still receive that even though they took out all this money while they were alive. So that's a great Social Security supplemental replacement, if you will, and so on. The other option that you have, of course, and I have seen this frequently, is that people will say, well, we'd like to see what would happen if the child starts paying $99 a month by the time they're in their mid-20s. And really what happens is that these withdrawals jump up by about $100,000 a year, because the majority of that premium is going into cash value and, again, growing tax deferred over a long period of time. And so it does, for a very small investment, they can make a pretty large impact on their financial situation by doing that, because their parent or their grandparents set this up for them when they were young and got it locked in for them and got it going. So you can see how that runs out. So you're looking at the benefits again. I tell people, thousands of juvenile policies are sold in America every day. Most of them are sold with $25,000 or $50,000 worth of death benefit, and maybe a paid-up option or a premium for life, and that's about it. Some of them will offer guaranteed insurability option, some don't, but in this particular instance, this concept shows that there is a lot of benefits here. First of all, the $99 a month is affordable for a large segment of the market that we're working. Premiums don't have to be paid for life, as I just showed you. This is really set up here with that premium for 20 years, and then taking out the premium actually a couple years. Again, our competitive advantage of having preferred non-tobacco rates on juveniles, and being able to lock in the coverage, as well as be able to lock in the ability to add another $700,000 without having to go through underwriting. And so it's really an excellent way for somebody to set something up and really leave a seven-figure legacy for a very affordable price. We also have some great marketing materials that are available. As you can see here, you can certainly call Bill and his team, and they have access to all these. In fact, I think they already have them there, ready to go out to everybody who's on this call. So they'll be able to send you these out. But the neat thing about it is we have the elusive client-approved marketing materials that you can use to help generate interest and get people thinking about this strategy. And here's a disclaimer. You want to turn around and memorize that. And that is about it. I guess I'll open it up for any questions that anybody might have, or you can certainly call the desk over there at Bill's office as well. So.
Yeah, Stephen, that was great. We actually have a few hundred agents on, so we have the lines closed. Otherwise, it would be a mess here. It would take a lot of time.
Sure.
So what we'll do, anyone with questions, though, please feel free to call us or send us an email. If we need to get Stephen involved, we can always conference him in as well. But this is an awesome, awesome door opener that I don't know anyone that would not be interested in at least looking into this a little more. So we're going to include some marketing material, some great brochures in today's email. We're also going to show you right now how to use our database and retrieve 1,000 new IUL prospects and, let's say, legacy prospects every single month. So we're going to show you that right now. I do want to personally thank Steve. That was a great, great job. It's a very simple concept, the way he explains it. I've heard it before, and it doesn't sound as simple, so I personally wanted him to jump on it and share this with our agents. So thank you so much for taking the time. Okay, so real quick, Agency Automator. Now, this is where you can retrieve these 1,000 IUL prospects every month. We made some new additions, some new changes we've been working on for a little over 2 years now, and we finally rolled this out this past Monday. So a great, great time for us. We call this Agency Automator 2.0. This includes an entire turnkey platform for our agents, a new free website builder, prospecting tool. That's where you go in and get your prospects every month. You'll get a phone, name, email, and address. You can dial in what criteria you want to search for and start marketing this stuff to these prospects and turn them into clients, right? That's the end of the road goal. Just under that, we even have a virtual assistant built in. This person will call on all of your prospects, clients, leads, anything you throw at him. If you're having a seminar, a webinar, and you want him to personally reach out to 5,000 people in your book, he will do that for you. So all of that is available at a co-op price. Again, ride our coattails. Like I was saying earlier with that whole Costco approach, the reason why we can do all of this stuff is simply because of our volume, right? So take advantage of this stuff. Just under that is our recruiting tool. Same process, okay, like I said earlier with the prospecting tool, but the way that works is you're going to go in and you're going to retrieve agents that we can place in your hierarchy. So you can go out, use our marketing material, and start recruiting agents to your own downline, sitting back and making overrides. So that's all built into the new Agency Automator. We call it V2, version 2 platform. So very, very cool stuff. It's now up and running. So we're going to send out an email on that, easy to use and understand video to put all the pieces together, because we don't want to confuse our agents. Some agents we have are in their teens still, and other agents are veterans in their 60s, 70s, 80s, even some in their early 90s, still going strong using our technology. So the point when putting all of this stuff together was to make it easy. I think I've said it probably 10 times today, but that's our goal, and I think we have accomplished just that. Joe's going to show you what these emails look like, how you can send them out, and then track to see who's opening and who's clicking so you can market and follow up to these prospects. Joe?
Yeah, thanks, Bill. So here, I just kind of included a quick screenshot here. We've got over 2,000 templates available inside of the media library for Agency Automator. Some samples here on the far right-hand side, just talking about Index Universal Life. We've got some that have videos. Like Bill mentioned, this is very, very easy, simple to use. We have weekly trainings that walk you through the entire process. The best part is it's very interactive for you as an agent. So when you send out an email to 1,000 people, you're going to see who opens it, what they clicked on. Those people are automatically moved over to your CRM tool so you can cross-market other products. We have product campaigns and different templates in here, from anything from term life to IUL, disability, long-term care, whatever the product might be, everything is available for you. We constantly add new templates. So if you're not using this, definitely take a look. It's a great way to kind of open up some new doors, introduce yourself to some new local qualified prospects, all inside that Agency Automator platform.
Okay, good stuff, Joe. So when new agents call, even existing agents for that matter, the first two questions that come up, I think we can all guess what those two questions are. Okay, it's not rocket science. Number one, commission. Number two, leads. Okay, well, we answered the commission question. Okay, again, leveraging our huge premium to all of our carriers that we represent and have direct contracts with. You can take advantage of you, the agent, having direct contracts with less pieces of the pie taken out. Okay, this isn't some kind of Amway or multi-level marketing group where you report to a GA who reports to an MGA who reports to an MGA2 who reports to us. Okay, with Levinson, all of your contracts are through us, direct to the carriers. So you don't ever have to worry about commissions. We know, in fact, we put the proof in the pudding. We have a cash for contracting incentive program. We either match or beat your current grid plus at least $100 cash with your first app. Okay, so that is how we prove that part to you. Number two question is leads. Okay, we have put together now over 4 various lead programs. Now, this is our latest program. I wanted to point out because we're having great luck and great success with this new platform. There's no perfect lead program, as we all know, but this program has been working great for us. If you're willing to put the time in, okay, I've seen great sales being made from these leads, and that's why I wanted to feature this on today's call. Also, we just reduced some of the pricing here. So this is a co-op program. As you can see, there's mortgage protection and final expense leads. You can see at the 20 and 30 mark, okay, we have this new sale going on with the lead vendor that I wanted to point out. So because of our volume, we're able to lower those prices. But it's so important, and what I wanted to add, and you can see the 10 leads, these are live transfers. So the way it works, a little different than the old school live transfer. The telemarketer or rep gets the client on the phone. They're interested. You get an email in real time. You can call that consumer back, and you will talk to them literally within minutes that they agreed to have an agent call them. Okay, so these are hot, fresh, 10 voicemail leads at $350. Final expense, 10 verified voicemail leads at $250. Okay, so great price, riding our coattails. We don't make any money on this. In fact, it costs us money, okay? But obviously, any and all business that gets generated has to come back through Levinson, and that's why we're able to offer all of these great programs to our agents. So again, ride the Levinson coattails, take advantage of this pricing. So I love the bottom statistic there, bottom left corner, and that is the average appointment set ratio for these leads is 60%. So 60% of all of these leads, the agent was able to set at the very minimum an appointment over the phone or face-to-face. Also, another feature I love, you can pick your top 3 counties, and most of the time, all leads are fulfilled in those 3 counties. So if you're comfortable face-to-face, sitting at a Starbucks kitchen table, this is a definite way to go for leads and final expense and mortgage protection. Okay, moving forward here, second to last slide, upcoming agent training events. These are so important. This is what you're on right now. And, you know, I can't stress it enough. You know, we go out there, we do all of the work, put the hours in to find out what's hot, what's not. At the minimum, jump on these live weekly training webinars. Spend 45 minutes or an hour with us. We're not going to waste your time. We maximize every second, every minute with valuable information. So Agency Automator, okay, that's the new version 2 that I showed you. That's the website and CRM tool and the recruiting tool, the virtual assistant. All of that comes under the heading of Agency Automator. If you want to learn more, I don't want to confuse anyone. We make it very easy. We host 2 twice a week, bi-weekly training webinars live with the programmer at 2 p.m. Eastern. So every Tuesday, Thursday, 2 p.m. Eastern, jump on and you can ask questions. We want to make sure that you're comfortable with the platform, okay? So please, I can't stress it enough, jump on to any one of our live training webinars. Those are open calls so you can dive in, ask questions, get comfortable. On the bottom there, June 27th, we're talking about all of the latest life long-term care hybrid products and some of the hottest life with long-term care riders that are available in today's market. So 2 p.m. Eastern on the 27th. Okay, we're going to end with this. Now, I love our Positive Tuesday quotes, and this is just another example on how we market Levinson & Associates at Billy Levinson, as you can see in the bottom right corner. Everyone should be using LinkedIn, Twitter, Instagram, Facebook, social media. Start branding your company name yourself. Anyone now can go home tonight, okay, and sit down at the kitchen table with their spouse and say, honey, I want to talk about what I learned today about this new legacy IUL sales concept, okay? Have your spouse hold the cell phone in front of you. Talk about this new concept for a minute or two. Take this video, post it on your Facebook page, e-blast it out to all of your clients and prospects. Okay, make sure, and you can put this on your website, okay, especially our new free website. You can press a button to upload the video, but make sure you send this video out to all clients, prospects, friends, neighbors, relatives. They're going to see you talking about this new legacy concept and how great this is and how inexpensive it is and how much cash value there is in 10, 15, 20 years, okay? That's going to spark a conversation that's going to lead to sales and brand yourself at the same time. That's how you need to be thinking in today's new world, okay? That's how Levinson & Associates was born 20, 30 years ago, was little by little we got our name out there. It takes time, but we were consistent and persistent, and today we have just under 15,000 agents in the country. You could do the same thing with prospects and clients on the consumer side. So just think along those lines moving forward. We'll end with this. Anyone that tells you your dreams will never happen have given up on their own. With that said, have a great rest of the week, a good weekend, and great selling. Take care.